Welcome to the Investor Financing Podcast, where we interview real estate investors and lenders so you can learn all the secrets to getting your projects funded and scale your portfolio. Learn about fix and flip loans, BRRRR financing, rental, fix to rent, commercial, multifamily bridge loans, business loans, and so much more. And now, your host, Bo Eckstein.
Good morning, Bo. How are you, brother?
I'm doing well. It's beautiful here. This is like prime time Las Vegas weather. I mean, it's not hot. I mean, it still gets in the 90s, but this is like the best time to be here in Las Vegas. And the mornings here are fabulous. And same thing, worked out this morning and always amped up to do the show. And we got a lot of hype about the guest today, so I'm excited.
I know.
Because from my understanding, he's doing some big rehabs and getting down and dirty and doing huge value adds and buying stuff that's not occupied and really kind of gentrifying neighborhoods. So it's gonna be interesting to hear the story. So I'm excited.
For sure, John. I mean, Bo and John Drusen, who is my partner in crime in the background, who got us all together, and also Jeffrey. I want to shout out to Jeffrey, who kind of shared Travis' background, and they're partners, and I'm so excited to have you. Travis, how are you, brother? How are you doing?
Real good, guys. Thanks so much for having me on your show here today. Super excited and humbled to be asked to join you here.
You're so welcome. I'd like to introduce everybody about Travis. Travis Bronik is a real estate investor, attorney, dedicated husband, and father of two, residing in Michigan for the past 38 years. He has been an active real estate investor for the past 17 years. He's the principal and founder of the Coast to Coast Group, a real estate investment and management firm located in the South Bay, Michigan, right there, focusing on affordable Section 8 housing. He enjoys helping his clients obtain the same financial freedom that he and his family have enjoyed through real estate investing. Welcome to the show, Travis. We're going to dig into it, buddy. And
great. I'm excited.
Yeah. Excellent. Mm-hmm. So give us some background. I mean, you grew up in Michigan itself, or kind of take us back to your childhood days, if you can.
Oh wow, my childhood days. We're going back. Yeah, I've always lived in Michigan. I'm 38 years old. And I went to Michigan State for undergrad, and then I had a little period of time in between undergrad and law school, and I went into to be a mortgage broker for a period of time. And I was really bad at it, but what it did was expose me to real estate and the benefits of investing in real estate. I saw a lot of people making big time deals, and I said, I want to get into this. I need to get into this. And from there, I had no money, like a lot of people getting into real estate. So I used creative financing. I bought my first house with a credit card, a 0% interest credit card. I bought my first house, and I worked on that house myself, sweat equity, put it in, went online at Craigslist or whatever it was. And I made a great partnership at that time, and sold that first house and ended up selling several other 100 homes inside the city of Detroit. And it was a good business. My business, my core business has always been affordable housing or Section 8 housing. I started, inside of Detroit when I was young, and my portfolio has expanded, still mostly inside of Michigan. It's expanded from single family homes, and about 3 years ago, I entered into the multifamily space and started acquiring multifamily properties, and that's been really great to me. But this year I made a commitment to myself. I said I wanted to go back to my roots. I wanted to go back to how I started, which was in Detroit, buying dilapidated houses, refurbing them, and getting them back on board. And so in the middle of the pandemic, or about to start in March, I had two really great opportunities that I saw come across. The first was a 22 unit apartment complex. Yeah. 20. I was in Jamaica on the beach at family vacation, just finishing up, and it came across 22 units, and the price was enough to get me hooked. It was, ready for this, guys? $200,000.
No way.
Now, you ready for the best part? It wasn't completely vacant. It had a lot of non-paying or low-paying tenants. This was a all utility included complex. Okay. But I thought 22 units for $200,000. Wow. I got to do it. Right. So wrote the deal up and I closed it with, closed it 7 days later. Yep.
Yes. Love it.
It was great.
What?
We should do business together. Hold on.
Yes.
Jeffrey, you, me, Bo. And Bo is a great lender right here, loan broker, the number one. I mean, he got me $8.7 million loan in 15 days, start to finish on multifamily.
Oh,
Hold
wow.
on.
Amazing. Yeah. So that project, and I'll circle back to that project because I know that's what we're here to talk about, the add value and bringing things back. But about a week later, another property came up. It was 32 units, and it came up for, I don't even know how much, $300,000. It was completely vacant. And I said, well, this is really more in line with what I wanted to do. I wanted to buy something that was completely vacant and bring it all the way back.
Yeah, exactly.
Yeah. And so I went very aggressive on my offering. And again, this is when every title companies were shut down. Everybody was shut down. I ended up acquiring that property for $190,000 in cash. And closed that project. So here I have 54 additional units into the portfolio, both that have their own challenges. And so I did minimal on the 32 just to secure it, keep it tight. And it has a new roof and new windows, so it's structurally very strong, sound piece of property in up and coming gentrifying area of Detroit. And, just on the numbers alone, and we're numbers guys, we know it's pretty hard to go wrong with something that's structurally safe at $200,000, right? Our rents have been consistently trending upwards. And remember, keep in mind, I do a lot of subsidized housing. So when everybody was panicking and go ahead. I'm sorry, Vinny.
Were this in opportunity zone of Detroit or something? You'll get some tax benefits out of this too, or no?
I haven't looked in it. I didn't buy it through a opportunity zone fund, but I understand that there's a couple other programs out there like the 45L, right, for bringing stuff up to snuff, make it more energy efficient, that I'm going to definitely look into. But for me, the primary focus was, like I said, I set out at the beginning of the year on my goal sheet what I wanted to do, and I said, okay, this will be a great start. So, but I circled back to the 22 unit because it was already partially occupied.
Yes.
And my original renovation, it kind of, it's started small and then it started expanding, because I wanted it, you get invested into these projects, right? And so I went from putting a new roof on and then said, well, I want to put new windows on. And so we put all brand new windows around, and we put the brand new hot water tank, and we put just finished up a brand new boiler system for the people. So I've taken that property that I think had physical occupancy of about 5 units, and I think we're up to about 13 right now. So it's good and climbing. I mean, that's going to be a home run for me. Was super happy that I was able to acquire both of those projects inside the city to work on.
I love that. And economies of scale too, when you're doing so many units close by. Are they close by to each other?
They're, they're about 30, 40 minutes. So relatively close, right? Yeah. I mean, it definitely helps out. Yep.
For sure. So let's say, can you kind of take us back? I think our, people will be watching this, hundreds of people watch it, later on also, and we will put it into a podcast also for us. So essentially, take us step by step. I know you are rehabbers, right? So what did you really look at numbers wise, and take us back there? Like, what's your,
Yeah, sure. When I'm looking at 22 units, I looked at something creative that I did. This was all one bedrooms and studios. And again, I do a lot of Section 8, so it goes by a set allowance by HUD. And I wanted to figure out, how could I make my studios into 1-bedrooms, and how could I make my 1-bedrooms into 2-bedrooms?
Yes.
And that's exactly what I did. I transformed all my studios into 1-bedrooms, and I transformed all my 1-bedrooms into 2-bedrooms. And that was relatively, a relatively easy thing to do once I thought outside the box on how I was going to position doors and walls and things. And just making that simple adjustment is about $150 to like $200 a door per month in rent that I'm able to collect. So I mean, that's huge from a valuation standpoint. But being that I had to buy that first property and I wasn't there, again, I kind of had to work backwards on the back of the napkin. How much am I going to grab for rent when it's all said and done? It doesn't make sense. Does it make sense off what we've been seeing or what I've seen inside the market? So, I set a rehab budget for that property, I think of $150,000. And I think we'll be closer to about $200,000 once we're done, because I did a few extra things that I hadn't planned on doing, really dialing in each one of the units. And there's a great, here, I'll put a plug. My website is primerentalproperty.com. There's a really great video on there of these units over on Midland. You can see the renovated unit, just real fresh and clean for the people. And I still kept them. So we do market rents as well, but for all the units currently, everything is all utilities included. And, to let you know, we're getting $975 for the 2-bedrooms, and I get $860 for my 1-bedrooms.
Wow.
Yeah. Yeah.
What? So the numbers on that, you bought the 22 unit again for how much? 200? Was it?
Yeah, I paid a little over. I paid 206. I had to pay the greedy realtor, some extra commission. So I paid 206 to him, on the deal. Right. And I'm planning to be into it for about another 200,000 in renovations, but it's going to be completely city certified, completely lead free, which is huge in Detroit. We have one of the most stringent compliance laws, completely lead free. And it'll be dialed in for about 200. So I'll be into it for 400, and just call it 415 to play it safe.
415, yeah.
And what do you think the stabilized value will be?
Oh man. I mean, it's got to be, let's see, I see stuff trading like in the mid 40s, just call it 45 to be conservative. Yeah.
Double. You just double.
Double. Yep. We like to do double though, Vinny. We did that last year. Jeff and I, we like doubles. Yeah, we bought a 41 unit. So this is in a suburb. Jeff may have spoken about it. A little 41 unit, and it was mismanaged, and it had neglected tenants, and put a little money into it, a little love into it. And we increased the value by 54%, 12 months later. Yeah, put all the money up plus some. Yeah.
I remember Jeff mentioned about that. Oh my gosh, that's amazing. That's amazing. I mean, that's what a lot of people should do it. And I'm telling you guys, everybody listening to us, there is so much powder out there.
Yeah.
2021, a lot of these, smaller units and other things are going to be coming out in the open, especially those tired owners, who have made some money and they don't want to go through COVID again. They're going to put it out in the market, right? So there'll be a lot of product coming. So be ready to grab it and do what, Travis and Jeff have done.
So by year 2, Travis, on this deal, you'll be stabilized probably, right? And then at that point, you're going to refinance, and you're going to pay yourself back or any of the investors involved, and then you can
all me. Yep.
And then you could probably pull out an extra $150,000 for free money, right?
Yeah.
And then you have long-term cash flow the rest of your life. And so a lot of the trouble with those properties, right, is that most lenders don't want to lend on a total vacant property. Well, that one was partially stabilized, so you can get kind of a bridge loan, and if you have banking relationships, you can get some bank financing on them. But it's a little bit more challenging on the smaller units, like the per price. Usually, a lot of the hard money-ish lenders, they don't want to lend on properties, at least on the West, the West Coast lenders. They want to lend on stuff that's 50,000 and above, like a door. Mm-hmm. So do you have local banks that will lend on the acquisition of these properties, or do you just typically go cash on these and then refi?
Yeah, I've been fortunate enough to have a really great run over the past 17 years in real estate. But I'll say this, and you guys probably know this: if it's a good deal, you can always find the money. All right.
So
Always find the money if it's a good deal, right? And
hold on. So did you get one or two investors involved in it?
this was too good of a deal. No, I robbed the kids' piggy banks and I bought them.
I love it. I love it.
Vinny's got an IRA. He's looking to lend.
Yeah, I am.
Okay.
I've got $500,000 in it, you know.
Yeah.
So if you need
Yeah,
it.
self-directed. It's great. I built up a nice self-directed portfolio. I love it. It's absolutely beautiful. Yeah, it's a great.
Can you talk us through like before these buildings when you were in like the single family space mostly? Because I know like years ago Detroit was where, I mean, you could buy city blocks really cheap. Like what were you buying houses for? Were you buying houses literally for back taxes back then? I mean, how did it look?
$5,000, $1,000. I mean, it was.
Oh my gosh.
And I wish I would have bought more of those houses. They're trading at, 80, 90, 100, $200,000 now in some of these markets. I mean, Detroit's really going through a renaissance, if you will. It's crazy. And I'm still buying single family when it makes sense in Detroit. I closed last week. I bought a house for $26,000. I'm putting $3,000 into it, and it's just rented for $1,300.
What? Oh my gosh.
That's why I like that. Yeah. That's why you got to love the Midwest. It's like
hold on, Bo. You've been in Indiana, guy. You need to be in Detroit.
I know. I mean, Indiana and Michigan are right next to each other.
Yeah,
So I drive into Michigan, and that's like definitely on my radar as well. But Vinny, what I was going to tell you is your headphones are they're the feedback on the they don't have. I don't know if you have there's some.
Oh, really? I apologize. No,
yeah, it's okay. It's okay. That's why
my Yeti mic. I'll do that. Or guess what? I bought it. I looked at yours and I bought it.
Yeah, for those expensive ones aren't the best for these. I find
like these suckers, $300 or whatever. They're not good.
Because every time you talk, you hear that. But anyways, I don't want to ruin the interview. I would just say. Yeah. But all right, so that's amazing, Travis. So do you just mostly you own in other markets besides Detroit and other suburban markets of Michigan, or where's your focus?
So I have in my assets. I have a small 55-unit hotel in Los Alamos in a partnership. I own some property with Jeff in DC. We have a small multifamily over there that we're converting right now. I own, is that Vinny there buzzing?
Probably. Hold on. Okay, I just muted him for a second. Hey, Vinny, I muted you just until you fix it. Okay, go ahead.
We own some duplexes, Jeff and I, in Tennessee, which has been a fabulous market. It's really been great to us. And people need to reach out to thanks, Jeff.
we got one fan. That's awesome. I love it.
Yeah, but I was, in the middle of the downturn, I was flipping a lot of houses and it was great. I was a young guy making a lot of money off turnkey property. But I finally got smart and I said, look, I can't always do this. I need to make sure that I start holding some property for long-term wealth creation. And so I started buying out closer to home in the suburbs. So, yep, I own some properties out that way. Yep, I have a few hundred doors out that way in single family, and then the multifamily portfolio we've been ramping up. I'm getting ready to close this. Yeah,
awesome. Wow.
Yeah. To Vinny's point, there's lots of deals out here. We just put under a small little 33 unit under contract. And it appraised for $250,000 more than what I'm under contract for. It's great. So
that's exciting. That's exciting.
Yeah.
Wow. So could you do a little bit bigger deals if you are able to syndicate? Do you do syndication or no? Yet.
My good friend Jeff, we syndicated a project together, down in Tennessee, a conversion project, and we're looking, definitely at the right deal. It's got to be right.
You bet. Totally. 100%. Is the feedback good now, John?
Yeah. 100 times better now.
All right. Awesome. I love it.
So Travis, So you got a lot of doors. I mean, scattered out a little bit. So
Yep.
do you have your own management company, or do you outsource that?
No, I'm in my, I own my own management company. I learned a long time ago that, if you want to control, the product, you want to control the results, right? You need to control the company. So
Surely.
yeah, I have a great staff that I could not run this business without. And
Travis, you're so right, buddy. I mean, in my case also, I've had two acquisition companies,
uh-huh.
syndication companies, and two management companies. And it's
Oh,
amazing. You say millions of dollars, millions literally, when you're
mhm.
dealing with 200 units, 400 units, and when, I mean, all the property management companies, not only they get 3%, but they also get so much more stuff on top of, every invoice and everything like
Mhm.
that. Anyways,
Sure.
so this is good, very good to be vertically, integrated. Yeah,
Yeah.
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 So, what's your thinking on this COVID? How it's going to help your business, you and Jeff's business? Kind of paint a picture. What investors can really look for, like if they are in your backyard, in our backyard. Yeah.
Yeah, I think you just got to put the offers down out there. You got to drive for dollars, right? You got to,
Mhm.
there are a lot of tired people that are out there. I think COVID's definitely going to be a great opportunity. I mean, it's already proven to be a good opportunity, great opportunity for me,
Sure.
the units that
Sure.
I've added on. And I think there'll be more opportunities in 2021 when people say, you know what, I don't want to deal with this anymore with the
Yeah.
because it's out there.
Hmm.
Um,
But most of your rentals are a good portion are Section 8, so they're paying as agreed, right?
Yeah, the government. If the government defaults, we got bigger problems. I think
Oh,
we both
yeah.
know that,
Yeah.
right? So yeah, we probably, if I looked at my portfolio, about 70% of it's probably subsidized,
I
and
see. I
I like
see.
it that way. So it's easy, right? I just respond to the requests when they come through,
Yes.
and take care of the maintenance as you would anyways.
What
Hmm.
what can you kind of walk us through the process of getting whether it's your multi-unit or a single family, getting it up to snuff for
Mhm.
Section 8 and some tricks and tips in that category?
Yeah, for sure. So at least in Michigan here, and I think it probably translates into a lot of other markets, when you're looking at a property, we look at amenities, right, for pricing.
Yep. Hmm.
And people think the fancy kitchen, right, being all, the nice new white shaker cabinets is going to pay more money, but in reality, it's not. That's going to keep your tenant, but the U.S. government says we're going to pay the same for
Yeah.
X kitchen as we are for Y kitchen. When
Hmm.
we talk about amenities, we're talking about things like ceiling fans. We're talking about things like air conditioning units. Okay, those are going to be the amenities that are going to pay us more money. Stoves, refrigerators, washers, dryers, right? So over improving the property is not going to help you in the subsidized world. It just isn't.
Yeah.
So
Good point. And the rents are pretty high. I was surprised when you just shared. I was thinking like Section 8 might be 795, 895, like that, right? But in this one, Section 8 would be, like you said, 1295 or 13. The 90% is covered by the government, and then they pay a small fee, or they don't pay any money at all, the residents.
oh man, this is the best part, Benny. It's a safety net, right? So
Ah,
if the tenant cannot pay, right, it's the government's job to step up and pay all of it.
wow,
Yeah,
wow. Yeah.
yeah.
That's
It's
that's
truly amazing. Yeah, and the rents I've seen, the rents are in line or above market rent. Okay, and all you need when you're proving your rents is at least one market rate comparable in the area.
I
And
see.
since we're in an up market right now, it's pretty easy for me to go online and
Yeah.
find a unit that's listed. Just has to be advertised. Doesn't necessarily have to be leased, right?
Hmm.
Or for what I'm asking for my
Oh,
properties.
excellent, excellent. So, how long is the time period then? I know you're your own construction company, so you
Uh,
got the subcontractors and
yep.
everybody.
Yep.
And so, like for doing 20-unit renovation, let's just assume, right?
Yeah.
And you have to do 32 is the coming up one, you said,
Yeah.
right?
Exactly. Yep.
32.
Mhm.
So, how long will it take for you to do what you want to do in that property? Yeah.
So right now, I would say I'm more than halfway completed. right? As
Okay.
far as doing major CapEx throughout, right? The roof, the windows are done, the boiler's done, all the stuff that's going to keep my current tenants that are there happy and continue to pay rent and keep
Sure.
me compliant with the government. I've turned more than half of the units inside and will continue to turn the rest of them over probably the next 3 months.
I see.
Yeah. So within a year, I will have had the whole entire complex turned. And I'll make sure to add some photos up on the site of what it was before. There's some on my Facebook, but it was
That,
super.
that'll be great. I wanted to promote your website.
Yeah.
What was the name? What was
Yeah,
it?
it's primerentalproperty.com.
Oh, Bo, can you share that on the? We could share the screen actually. Maybe
Sure.
I could. Yeah. See if we can go there. That'll be good.
Thank you. Thank you.
And that'll be amazing. Yeah, I think something so special, and people can reach you. To get your opinion, to get your, even invest with you, or even
Would
bring
love
their deal to you. Bring
Yeah,
their deal. They say, "Hey, Travis is the man. We should sell it to him."
yeah,
I would love that. Yeah,
yeah,
exactly.
yeah.
So, no, that's good. What else can take us back? Take us back, like with you and Jeff. I know Jeff owes a lot to you. He mentioned it. So Jeff has really. Oh, there it is. Yeah, kind of
Yeah.
take us through partner in real estate. Your partner in real estate, coast to coast group.
Sure.
Very nice picture. Everything. And
Thank you.
then there is the story. Yep.
Yeah, yeah.
And
So
then
Jeff and I'll take you back. Jeff and I met.
sure.
Here's some of our projects here, but Jeff and I met in law school, and Jeff is very outgoing, as you know, right? Super social, and we hit it off almost instantly. But I was pretty. I had my flipping business that was going on then. I was talking about real estate with Jeff, and I enjoyed Jeff so much. I like Jeff so much. I'm sure
Yeah.
he told you about the first deal that we did together. Did he tell you about the first deal we did together?
He might have, but tell us
Let me
again.
tell it again.
Yeah.
So I told Jeff, I said, Jeff, I want you to invest in this deal with me.
Hmm.
And I forget what the money was, $5,000. And he said, I don't have it right now, but when the student loan checks come back, I will give you the money. I said, great. Well, by the time the student loan checks, or before the student loans checks came back, I said, hey, Jeff, here's your profit sharing on the property that we were going to buy together. We already sold it. I'd already sold it.
I love it. That's amazing. That's then infinity percentage return. He
Well,
didn't
for
put
Jeff,
any
right,
money.
Yeah, it was. It really was. But Vinny, I'm a man of my word, right? As I know you are.
Totally. That's
So,
the way
so
to do it.
yeah, you made
That's
it
the way to do it.
only way.
The exciting part is, I know I told Jeff also, I've been investing with, some people, and I do my own investments big time. We just bought the 34,750,000 couple of weeks back in Austin, Texas.
Oh, wow.
308 units we bought, right? And then we are going to buy more in Austin, in Florida. But love to see. I mean, if you are looking for some partners, we can scale up bigger, whatever. Yeah, it seems like, you and Jeff have put together a great team with Jillian. Jillian is a great friend also.
Great, yeah.
Jillian Sidoti. Yeah. So we can look at. But, the key thing is, I think it all starts with the mindset, right? I mean, take us back. I mean, COVID happened, but we didn't know COVID is going to happen, right? As of even February, March,
Right.
when we came back from vacation, like you were in Jamaica, you were saying, right, with your family enjoying. So I think it all boils down to what signals you send out, that the manifestation of the things happen when you send out good, strong signals. Do you believe in that? Yeah.
Oh, certainly. Yeah, sure. Put positivity out, get positivity back. I mean, we have a choice every day that we wake up on how we're going to look at life.
Yeah.
Right? And so it's a lot easier to walk around and being positive. Definitely.
So true. I don't know if you knew that, or I wrote the book. Vinny's always ready with his book. Positivity brings profitability.
Sure
And it's been kind of wonderful. The key thing I've like everybody who's listening to us or watching us later on, please do follow our show every Friday, 9:30. We don't have any like the commercials and sponsors on the show. We just do everything. Bo and I pay for all the things and editing, all that, equipment. But the key thing is we want to bring value to our investors, to our audience, and that is for anything and everything you want to write to us. You could write to Bo right there. You could text me and my team at 925-766-3518. You could text Bo 925-852-8261. And again, the key thing is that we want to bring value to you. If you think you have some really great speakers who would like to be guests on our show, please let us know that too. Right, Bo?
Right, and we're also streaming now on LinkedIn. So, and
Yes.
that's good because we weren't there before. So now all of our LinkedIn friends can watch us. And Brendan says hello. Good, 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 good.
Yeah. Awesome. Awesome.
So,
Awesome.
so Travis, can you kind of take us back to like how you built this machine? Like, what does your marketing look like to find these deals?
Man, right now my marketing is relationship based with brokers primarily, right? I mean, we built up luckily within the last 3 years of, we close, right? So, because I have a management company, I have a decent sized single family portfolio, and, transitioning over into multifamily, they know that I'm going to close, which is great.
Yeah.
Actually, my most recent deal was brought to me by a broker. He said, "Hey, I got a deal. It's perfect for coast to coast. I know you're going to bring tons of value, and I want to be your partner."
Excellent. Excellent.
So does that mean he's in the deal with you a little bit?
Yeah, it was funny. He brought the deal, and I stopped, and I said, "Okay." So he said, "I'm not getting a commission." I said, "Well, that's not right." I said, "Well, let me pay you a commission on this deal. I want to pay you a commission."
Yeah.
And then he hesitated. I said, "Do you want to invest in the deal?" He said, "Yeah, I want to invest in it." He's a younger guy, and I stopped for a moment. I said, "Do you have 200,000?" He said, "Yeah, no problem."
Oh.
So never underestimate people, right? By age or appearance, right? You never know. And he's a great guy. He's awesome. We're gonna have a great partnership together on this piece.
I love it. Love it. Love it.
And I'm super fortunate that he brought the deal. Yeah.
Sometimes I always say I wish I lived in the Midwest, but then I go there during the winter and I'm like, okay, now I know I don't live there. The only thing about when I go to Indiana, the only thing I hate about it is that the winter, I couldn't.
Brutal.
Yeah, that's the one thing you have to overcome about the Midwest. But I mean, you talk about being able to make money in real estate. I think it's the place to. I mean,
lots of opportunities.
Where else can you be all in on a property for 35 grand and $1,300 a month in rent? And just, I always like to think about it that way. If you're just getting started, you're only about 10 houses away to covering your day job, right? Essentially,
so true. So
if you have a little bit of loan capabilities and you have 100 grand, within a year's time you could probably get up to $8,000 or $9,000 a month of passive income by buying in the Midwest. That's what's the appeal of it is and there's a lot of out-of-state investors, but Travis's advantage is he's there and he's got a team. Like for me to try to buy in the Midwest is difficult because I have to go look at the property. I have to try to find a contractor. The problem I run into in Indiana is finding a contractor, right? It's hard. If you're not there, it's so hard on these smaller properties to manage it. That's the killer.
Right.
That's why out of state is very difficult in those type of markets.
So true, Bo. Yeah. I was going to say, when you said the cold, I actually lived in the blizzard of 1978. That's the one. I mean, I go way back, 42 years back. I lived near Toledo, Ohio. I lived in Bowling Green, Findlay and Bowling Green in my previous life. Then we got married and moved to California 40 years back, But you're right. Snow, it was, it's great there. And, the key thing is, I think sometime I've not invested in the north side because of pipe bursting and things like that. What Travis is doing is putting brand new. I love that. The new boilers, new this, new windows, new, so you're building actually, this property is good for many, many years, 30, 40, 50 years, you bet. So that's exciting. What else can you share with us, Travis? How do you spend your day, buddy? Tell us, what gets you motivated every day? And yes.
My day typically starts between 4 and 4:30 a.m. Yeah, I'm an early riser.
Yes.
Wake up, reflect on, what God's going to bring us today and what He's already
Yes.
given us. And
Yes.
my son likes to wake up between 5 and 5:30, and
Ah,
he's 2 years old.
2 years.
Yeah,
Okay.
he's
Wow.
2 years. Yeah,
Yeah.
and get to spend good time with the family in the morning,
Mhm.
and typically try to be into my office by 8:30 or 9 o'clock thereabouts. Yeah. But
Fab.
I spend a lot of time. I'm a very hands-on operator in my projects and my properties, right? So I need to see things. I need to see the problem and to wrap my head around it to fix it.
Beautiful.
So
Beautiful.
I,
No, that's very exciting. Very exciting. I was going to say then. So hold on. Your friend Jeffrey is in, Chattanooga,
yep, yep.
but you live in Michigan. But you talk on the Zoom and things like that, like
I
every day, every other
uh,
day, or how?
yeah, I talk to Jeff probably 2-3 times a day.
A
Yeah,
day. Okay. Okay. Okay.
yeah,
Yeah. Yeah.
yeah.
Yeah.
We're good
Yeah.
buddies. Yep. So constantly scouting out deals, or talking about deals, or
Mhm.
talking about our current portfolio. But yeah, that's a typical day. Work hard. I try to be home for dinner by 6 o'clock, and I go to bed by 10 o'clock and start it over again.
Yeah, yeah. Beautiful, beautiful. And like you said, time with the family, that's so important in the morning time. Like we talk about Miracle Morning, right?
Yeah.
Hal Elrod, our friend, wrote that
Oh,
book, Miracle Morning, Miracle Equation, and so forth. I mean, so good. It's so good to get up early in the morning. When I did a W2 job, by the way, I'll get up at 6:30, 7 o'clock, whatever, right? But now when I'm freedom, when I retired, literally what did retired, my wife says you never retired. You're working more now, but it's fun. It's fun. And that's when you get up early, 4:30, like you said, or five
right.
o'clock and you really enjoy that special time. You bet. You bet.
Yeah.
How would you tell let's see, somebody who wants to do what you are doing, right?
Sure.
What would you tell them? Three most important things they need to do if they want to do flipping of homes or even getting into the multifamily like you are doing, renovation style, yeah. What are
Yeah.
three
I mean,
most important things? Yeah.
just do it. What's the worst that's going to
I
happen?
love it.
Just do it, right? But definitely mentors are important, right? We need to reach out to people in the space that are already doing it. We need to ask questions.
Mhm.
So it's important to educate, but there's a point where you need to just do it, right? So, I think I would have been in multifamily a lot sooner if I would have just did it. I was trying to find objections. Well, single family is so great. I've been making lots of money and I'm doing great in it. Why would I want to go and take on a big loan, right? Because multifamily has these big numbers. It gets
Yes.
scary, right?
Yeah.
What I
Yeah.
say is there's safety in those numbers. There's safety in more units. So just do it. Ask the question, then do it.
I love that. I love that. What you just said. I was going to mention it. My first multifamily unit, some people know I bought 14 units in Odessa, Texas, right there
Mhm.
for $180,000. 180,000. That was my first deal 13 years back or something. And last year I bought $52 million deal, 324 units. And then, the numbers just scale up, right? But it's the thing that you got to take that first step, 14 units, 12 units, 20 units, like you are saying, 32, 36, 45. It's good to get the ball rolling. The first one is the hardest one, but after that it's just spinning effect. It's just domino, keep on going and going and going. And the big thing also is the syndication world, which I've lived in for the last, I think if I wouldn't be where I am today, with 4,400 units and 400, we just counted $21 million. We just
Oh, wow.
counted it yesterday, my daughter and I, so we own that much, and I'm on the loan of all that. So every single thing I bought myself, me on the loan, nobody else on the loan. Look at that. So you
Amazing.
could see that, you really, it's a that I think I'm glad you brought it up. It's the fear of not knowing, it's the fear of failing, it's the fear of taking that first step What you just said, just do it. You know, I mean, lot more things can be accomplished if we just do it. And yesterday I was on a panel, actually on a deal finding panel, 3-day summit, and they talked about 80% rule. I said 80%, that's Pareto principle. No, no, no. They said if we find the deal makes sense 80%, not 100, we're going to pull the plug. I said, what? So that's where sometime we need to be deciding our life, because if you wait for that 99.5% being sure, you will never do anything. Oh, maybe. I mean, if you're a perfectionist and you want everything to be perfect for you to, go into the deal, that may not happen. Don't you think, Bo? I mean,
Well, yeah. If you listen to what I think, Travis is a perfect example. He said he was on vacation and he pulled the trigger to buy it without even walking the property, right?
yeah, yeah, yeah,
So, yeah, I think that's true. Like you have to build that instinctual appetite up where you're like, okay, I'm confident and like I've reviewed and studied the market, and when a deal comes by, you don't necessarily need to go walk it. You should just know, instinctively, and also know that you have some time to like make sure that what's been told to you is true, right? And then,
yeah.
but it's if you're not able to do that, you're never going to get the deal.
Yeah.
So true, so true. Time span is there, right? I mean, the broker wants to sell, the owner, the seller wants to sell. So you got to pull actually, pull the plug is the wrong thing, right? That's getting out of the deal. You got to go into the deal,
Mhm.
right? Put an LOI or contract directly and just take it down, And that's why I think people and the brokers are loving you now, right, Travis? They want to bring the deals to you because you are a performer.
Yeah.
Performer,
Sure.
you
Yeah.
know? You're not going to just dinker around if you waste their time, but you're going to just, if it makes sense, you're going to say, okay, let's get into it, right? That's how people like it. Any other stuff, Bo, comes to your mind? We could wrap up we would love to say, Travis, how can people reach you, buddy? Uh,
They can go to the
Sure.
website too.
Yeah, my information's on the website for sure.
okay.
I'm super available. There's the email
Yeah.
there at the site. I'm happy to talk with anybody
Mhm.
about real estate or how I can help them here with either management or partnering or
Sure.
anything they're looking for that's related in that realm.
Hey,
But
partnering, buddy. Remember Vinny and Bo.
yeah, for
So
sure.
we would
I would
love
love to do
to.
something with you guys and Jeff.
Yeah.
Yeah, for
Love
sure.
to, love to, love
Do
to.
you do
You.
you, do you manage third party for people too, or case by case,
So
or
I'm super selective in the clients I let in. Right.
Sure. Sure.
Yeah, it's they have
Smart.
to be aligned with my management, with my morals.
Totally. Mhm.
We talked about, you said, Vinny, you like it because it's all new, right?
Yeah.
I mean, we diagnose and we give a recommendation, but I don't put band-aids on things. I want to do it the right way because
Totally.
we live by one rule, and that's the golden rule: treat other people how you want to be
Totally.
treated.
Totally.
So,
Totally.
do,
Oh
do you
yeah.
do you ever like work with out of state investors who might have like a self-directed or retirement funds, and they want it kind of not so much turnkey, but a turnkey concept where do you have teams that or some of your portfolio that you sell off occasionally to investors?
yeah, I occasionally, but I could definitely help people looking for turnkey products. But to be honest with you,
Mhm.
I mean, I would rather build it for them and get
Ah,
the value for them, right? So instead of paying that markup, I
yeah.
would rather work with those clients. I have a lot of clients that are overseas. I represent a hedge fund overseas.
Yes.
I represent a lot of, a few different clients, not a lot, but over in the Australia area. So we're great with out of country, out of state investors.
Marvelous, marvelous. I would love to, if you don't
Yeah,
mind, maybe after the show this week. I mean,
sure.
today's the Friday, but maybe next week with you, Jeff, me, and Bo, we should do a Zoom and kind of see, where we can collaborate or kind of come in and, if you need us. I mean,
For
that's
sure.
the
I'd love
big
to
thing.
walk you through one of
Huh?
our deals from start to finish,
Sure.
show you some of the things that we purchased and how we've taken it back and the numbers, because the numbers are where it's at, right?
Totally.
That's where we make the value over here. And it's
Hey
Fabulous.
Vinny, and I could use your IRA. You could be my
Totally.
my bank, and then I buy.
Yeah.
Yeah,
Sure.
that's perfect.
Sure.
OPM.
Something Jeff and I, that's what we do. Okay, you'll be my bank. I'll be your bank. Okay. And we'll use our IRAs. Yeah.
We'll do fun. We'll do fun things
Where
together.
did you get your loan? The Bank of Vinny Chopra. Here's my book on being the bank. Come on.
I love it. I love it.
Yeah.
It's the best thing to do because I think if the partnership is good, it's on honest ground, transparency, and like who we are. That's where it really boils down to. Really, then the sky's the limit. I mean, sky's the limit. I'm thinking about Shahid Imran, right? My partner in assisted living. We're going to be $1 billion company, billion with a B, and we're going to be building 200 million each year. 200 million each year, for the next 10 years. That's 2 billion, and then not only now, we are also forming a REIT where we are going to build, we're going to manage, we're going to in 3 years sell it to us. So we are in the starting, we are getting the investors in for 3 years, give them excellent return, 63% over 3 years, and then we come back and change the investors out, or some of them can stay 1031 into the next deal, and we'll buy the deal and then keep it for 5 to 7 years, then refinance, give the investors out, then we keep it for our family for 30 years. So that's our plan, because Shahid's kids are young and our kids are young,
Yeah. That's great. And so that's open to invest in now, Vinny? Awesome.
Yeah. We just raised 4.2 million. Then we raised 4 million. Then I just raised 8 million, and in what day and a half, 8 million day and a half. And now I have a partner who just flew this morning. They said we'll bring 3.5 million for you, Vinny. Done. So they're going to Michigan. They are flying into Michigan today, actually, and they're going to Dundee. If you know the city of Dundee, yeah, Hampton Manor of Dundee, which my partner built it, and now we are selling buying the property into a new LLC, so that we can do cost segregation and everything.
Sure.
And then our new investors are coming into that deal with us. Yeah.
Very exciting. I'm just thinking about Travis's $1,000 houses he's bought, and that's awesome.
Yes.
I'm like a Kmart shopper. I don't know. I bought a house for like $9,000 one time, and I was like so happy because it only needed $5,000 to fix it. So I'm in it like 15, 16 grand. And it gets about $630 a month, which isn't nearly as good as,
which is okay. But look at
But so really, I mean, I always tell people you can get started in real estate with a credit card. And Travis is the point in case, and now he has hundreds and hundreds of doors. So that's what's exciting about real estate, right? Vinny came from India with $7 in his pocket.
Wow.
And now he's got millions and millions of dollars, right? So it's out there for people to achieve. I think we just got to I'm hoping whoever watches this now or in the future, we're listening to two very inspirational people that have, started with very little, and now they're very successful. So that's kind of why we do this show, is to how did they do it? And I think Travis's story is a little bit more
amazing. I love it
because it's just he did it on small properties, right? That's where he started. Where you kind of bypassed the small properties. You did buy some single family in the beginning. You owned 30 or 40 houses, but where Travis just did tons of renos and he learned how to BRRR, cash out and pull his money out. I'm sure he became an expert in doing that, right, Travis? When you were starting,
honest, I didn't put any debt on my single family home portfolio until about 2 years ago.
Oh my gosh, that's amazing.
I was debt adverse, and so one of the best things I ever learned was, I got over that aversion to having debt on my portfolio. And when I started putting debt on the portfolio is when I really started to cook, right? I was scared.
So you would just buy these. You were buying them so cheap back in the day that you would just pay cash and then fix them for 10 or 15 grand, and then just never. They're worth 80, but you wouldn't pull money out on them or whatever.
Yeah, I left all that money on the table, right? And so my cash, my rent roll, I would buy a couple houses every single month, right? Just put them in, keep adding houses.
Wow. So amazing.
So what's your goal? Like now it sounds like, Travis, you're pretty young, you're under 40.
Yeah.
and you're successful, and you probably got enough cash flow that you don't really need to work anymore. I mean, what's your kind of like what's your plan? Like when you're 50 years old, what do you want to look back and have accomplished?
Gosh, what do I want to look back and have accomplished? Well, I'm going to work until my kids are out of college. I think that's the first thing, right? So they're 2 and 4, so probably 60, right, or a little bit before. But when I look back at 50, I mean, I want to be Vinny, right? I want to have 4,000 doors, honestly.
Totally.
Yeah, or more, right? 10,000.
More.
I want with good partners, right? With good partners, the sky really is the limit. So I want to get out of, my safety zone, which is the Midwest. I want to start investing in other markets that make sense. Problem is, guys, I haven't found a market that makes sense more than where I'm at right now.
But I think when you look around, like if you look for the red bug, I remember that, right? When you start looking for it, you'll find it, right? So you're right. You're at the right place right there, but you are also very close to other emerging markets also, and more. Yeah. And it's good to do very well where you are because you have good control, but then also expand, right? Like
100%.
yeah, totally.
But I think Travis likes the control of it, and so I don't think that. I think he'll probably most likely do what he's doing, because what he's doing is really, he doesn't need emerging markets because he's doing Section 8, and there's Section 8 everywhere, right? His niche is affordable housing, and that's probably where you're going to get the. I mean, really, it's a little bit more challenging to a certain degree, but it's, since he's like specializes in it, it's like bread and butter for him, right? Like, and so
100%.
for him to go into other stuff, I think maybe when he's 50 and he's got so many millions of dollars where he can then invest in other horses, and a horse and operator, that might be like what he'll do then. But like right now, it's like, where else can you be all in at 30 grand and get $1,300? Like, you know what I'm saying? I guess if you looked at even on these big deals, you couldn't get those returns. Collectively, where then I look at Vinny's model, where he raises a lot of money and can make a lot more money fast because he's able to leverage and then also create wealth for his investor partners. So it's just, you guys have completely different models, both successful. And so I've taken a lot out of both of the, like your model. And the reality is, if you know what you're doing and you buy the right assets and know how to raise the money, you're going to make money, right? So you can buy, some people don't want to do Section 8, right? And then other people say Section 8 is the best thing ever because it's guaranteed money.
I want to just say one thing about Section 8, because it's really near to me, what I'll share. When Section 8 isn't maybe what everybody thinks of as the single mother, right, with the 3 kids. This is our vets too. I have a close partnership with the Veterans Administration, and so I house a lot of veterans inside of the properties, and that feels good to me. It feels good to get off the street or get into clean, affordable housing. But
totally.
Yeah,
it's a big mission. It's a mission. It's a such a good thing you're doing, really, Travis. That's the key thing, because every housing, for conventional housing or Section 8, I did Section 8 also in the California. I don't know if I told you, our house in Modesto was Section 8, which went from 65,000 to 315,000. Wow. I couldn't believe it. Holy cow. It went in 4 or 5 years. We pulled out 290. We pulled out 290 at 3.5%, 20 years back, 30 years back. I just sold it 2 years back, right? We made so much money cash out and bought homes in Arizona, Joe, and then, where is that? Georgia and all that stuff. But key thing is to have a good model, stick to it. Now, I have not moved at all. I have run this whole business remotely. Just to let you know, Travis, right there in Texas, I have, at the peak, we had 135 full-time people in our company. But I have always managed it through Zoom and flying 4 times a year. That's all. Just 4 times. And we have done renovations. We have done assistant managers, regional managers, community managers. Accounting department is right here, which is 5 people full-time in accounting. So the systems can be built. I just wanted to say the key thing is also diversification is good. good for you and others, because what happens to just one market, right? So it's good to kind of diversify. That's another thing, right? But Indianapolis is not far, like there. And I know Derek Clifford, Bo is there.
I'm South Bend. South Bend.
South
South
Bend,
Bend.
all the way. So no, that's exciting, and I think maybe this meeting today can flourish into something big, partnership with us. You bet, you bet.
And I think we should do another show and have Jeff and Travis on at the
Yeah,
same
I
time.
think I think that'll be great.
I think that would be a good show. That'd be like
And Jillian too. I want to bring Jillian also on our show. Yeah,
we
that'll
can
be
have we
amazing.
can have 8 people. We should just do that would be a fun one to do.
That'll be amazing. Yeah,
Yeah.
yeah,
Well,
fabulous.
well, Travis, thank you so much.
Thank you, buddy.
I really,
Thank you,
really
bro.
appreciate your time. Thank you so much.
Thank you so much. Have a blessed day.
Thanks for listening to the Investor Financing Podcast. For show notes and useful resources, please visit investorfinancingpodcast.com. For questions or comments, email info@investorfinancingpodcast.com. If you enjoy our show, please share it with your network. Until next time.